following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials off for 177. You get the Nasdaq off 55. S&Ps are down 20. We have gold flat, 12.95. Silver's down 7 cents, 17.58. The 10-year notes up 23 ticks. Big move, 130.13. The bonds are up almost 2 full points, 164.03. Good old King dollar down 58 ticks, 92.56. The euro is up 15 at $1.15, and the yen is down 46 at 105.95. And King dollar just took a deep this morning.
Look at those bonds, right?
Oh, the bonds are a trip. There's no doubt. The 10-year note. This got some traction underneath it. You had last night, you had the Australian National Central Bank go down on rates as our central bank thinks they're going to go up on rates.
Trying to, at least.
Trying to. There's no doubt about that. And as we do each and every day, we'll go over to our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. And folks, every trading day, 12 to 1 Eastern Standard Time, Kevin, Scott, Cindy got an amazing show. Now, no matter where you are, if you're in the West Coast right now in your car, remember that you can get us right on your cell phone. Just go to TFNN.com, hit Tiger TV. You're going to get HD quality video as well as audio. Kevin Hinks, what's going on?
Good morning, Tom and Tommy.
How you doing, man?
Hey, how's everybody doing?
Doing well.
Hey, the dollar's going to hell in a handbag, man. We're doing good.
I have to ask you something, Tom.
Yeah.
Can you imagine trading these bonds in this environment?
And what happens, folks, is just so you understand, the bonds are $1,000 a point, and you can leverage them to the hilt. So yeah, no, I'm with you exactly, man.
These bond traders have got to be pulling their hair out. Right,
because this is very unusual, folks, that you get a type of move like that. Just to give you an idea, okay? So the 10-year note is at 130.14. And that is almost a $1,000 move, and you're putting $1,400 up.
I mean, it appears, the 10-year yield grinds, tries to get up to 1.9%, looks like it's holding firm, and then any hiccup across any market, and they slam them right down to 1.8. I mean, there is no faith.
No, there is.
That these yields are going to hold at those high levels.
There's no doubt. It's 1.78 right now. And, this morning I heard a guy on Bloomberg, and he was making a really good case, man, that we could be, his case was that by the end of the year, he thinks we're going to be at 1.5 on the 10-year. And that would be pretty intense.
Yeah, that is. I imagine that is counter to the way a lot of people are trading these bonds.
Oh, there's no doubt. I mean, listen, even at the last couple highs, I'm saying to myself, is that it? And I felt, I felt it really was, So it's like, okay. But when I was listening to him, I said, you know what, man? It totally makes sense that you could be at 1.5. Because when you look around the world, man, I mean, the rates up, we're high.
Absolutely right. We are. I mean, you're exactly right, Tom. It's not necessarily that our bonds should be 2% or should be whatever level you think, but the rest of the world is so low.
It is.
That we look incredibly high compared to them in our yield.
Right. And what happens, folks, it's big money. It can be institutional money moving. It's like, if we were over in Europe or Europe or South America, it's like, we're not going to keep our money there when the U.S. in a treasury, mind you, folks, the safest, bond bet you can make probably in the world. You know what I mean? It's like, okay, why not put it into a treasury, right? Yeah. Pretty wild, man. Hey, we got a market here, man. We got a trader's market here, man.
Oh, I'll tell you what, it's all, if you don't like it, just hold on 5 minutes. It's changing.
Isn't that the truth, Hey, you know what I saw, and I was going to give you a buzz, and I'm going to give you a buzz maybe in a couple weeks. You know what's interesting? So picture this, folks. A lot of these small gold stocks, Kevin, right? Now, this happened in 2002 and 2003. They have options, right? But they're not liquid options. But when I was looking at a couple of them, right? And a couple stocks that are only like $2 had bids at 40 cents going out 3 months, and I'm saying to myself, man, I'm going to sell a bunch of calls. I own the stock anyway. Do you know what I'm saying?
Oh, right. As long as you own the gold stocks, yeah, I have no problem with that.
Right. No, I own them.
And
but
I'd rather have a different strategy.
Right. No, it would be just to roll it. If they took me out, so what? Took me out. Do you know what I mean?
Absolutely. And remember, each time you do that, Tom, each time you sell that call and it doesn't get up to that level, those go out for zero, and you've lowered your cost basis by that amount.
Oh, and let me tell you, at 40 cents, that was my cost basis.
Right.
Which is
right.
sicker.
Right.
So you've got very little to lose there.
Right. And it's really out of whack. Do you know what I mean? This will come back into whack. But I saw this happen in 2002 and 2003, and it's only because when you get a run that's so quick, they don't know. It's not that they don't know how to mark them, but it's like, hold it, this is too volatile, man. They're marked up a lot. There's a lot of premium.
And really,
in them.
and with what's going on in the dollar right now, all of these commodities probably have upside skew. It's very interesting because that's what we're going to talk about on today's show.
Oh, I'm listening. I'm listening, man.
And so these markets are probably identifying upside risk. That's why the skew is probably tilting towards the call and not the put.
Yeah, 12 o'clock right here, folks. Kevin, have a great one. Have a safe one.
Can't wait, guys.
Tommy and I are coming right back, folks. Stay right there.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we have the Dow Industrials down 184, NASDAQ down 57, S&Ps are off 23. You have gold down 330. The dollar wants to make a little comeback here. It's gone from 91.88. We're at 92.65 right now. We talk commodities, folks. Of course, every Tuesday, Thursday, today, 5 to 6 o'clock Eastern Standard Time. My man, Mr. Andy Heck, does a great show. And tomorrow night, he is doing a great workshop, okay?
He sure is. He's starting off his workshop, right? Starting off his course, for sure. 12 essential lessons for trading commodities. And really, it's his version of the Master Trader,
right,
where he's going to do 4 nights, 2 hours a night, and he's going to do 3 lessons within each one of those nights. So each lesson's going to be about 40 minutes. They'll be archived separately, so you have 12 lessons you can go in there and watch. And, if people want to get a feel for the course, they can click on it. You can see kind of each lesson structure, what he's going to be talking about, from commodity markets in general to things like inter-commodity spreads, location spreads, processing spreads, term structure, backwardation, quality spreads. I'm going to watch all 12 of these at some point myself.
There's no doubt.
And it's going to take me a little while, of course, because it's 8 hours of education in there.
Right.
But I'll watch the archives, if I can.
Good university course. It's better than university course.
It is.
So what you have, folks, is this. Tomorrow night, you get 2 hours, three lessons. Then we skip 2 weeks, 2 hours, 3 lessons, 2 hours, 3 lessons, 2 hours, 3 lessons. It's hard to believe that. And
it basically goes from the middle of May to, it's 6 weeks because it's 4 classes spaced out by 2 weeks each.
Right. And if you can't make it, right there, you don't have to worry about it because it's going to be on your page for a full year.
And I think it's perfect the way Andy drew it up in terms of spacing it out because it's just so much information in terms of you don't want 8 hours in one day.
No way.
Where he takes the time to, I'm sure weeks putting together the course, and then all that information, you need some time to process it. So it works out well. And of course, he's available for questions throughout there. He's always got an email to his students. So check it out.
Check it out. Right in the front page of TFNN. And, the bottom line is that when you take a look at this market here, folks, okay, if we pull up.
Even Kevin was just talking about that they're going to be talking about commodities.
Yeah, right.
The same deal. I mean,
exactly.
It's an opportunity.
Well, these commodities have been running, man.
Yeah,
I mean,
exactly.
and the dollar has gone where it wants to go.
They can affect so much, whether you're talking about oil and the oil stocks, and the oil stocks hitting, the S&P and the Dow.
Right. When you put it together, it's pretty cool.
It is.
And the aspect also about if we go take a look at, and this is where he was talking about location spreads.
Yeah.
So that gets really interesting.
I love hearing about that stuff. Yeah, totally. When you're talking about, what oil in one place versus oil in another place, right?
Well, what's so funny about that? So picture.
And not just oil, but that's the first example that comes to my mind.
This isn't great. This is what happens, folks, is that in the physical commodity trading, right?
It's not just paper equity shares.
It's so important. Do you remember when we had the offices up in Alaska? When I was in the ticket business, I had the office up in Alaska. And the reason I did, folks, is that I was basically a wholesaler in the United States, in the lower 48. And what ended up happening is that I was selling most of my tickets in Alaska, and I'm saying to myself, oh my God, hold it, they're worth more money in Alaska. So we ended up with 3 offices up in Alaska. And that's all that was. I was taking a commodity from the lower 48 and bringing it to somewhere that was more expensive.
Yes.
And of course, in that business, if someone could figure out how to get natural gas, to Europe cheap, they could really do it. Because natural gas, I don't know the last time Andy was talking about it, was like $8 or $10, and it's $2.14 here.
Okay.
Isn't that a trip?
Yeah.
That's like insane.
Yeah.
So. If we go take a look at these markets, so folks, you can go right to the front page of TFNN. You're going to see 12 lessons, commodity trading course with our man, Mr. Andy Heck. You can sign up right now, get yourself a great education. We come into the markets out here, and right now you got the Dow down at $180. So let's look inside the Dow and see what we have happening. Inside the Dow, you only have 3 stocks that are positive. Pfizer is up 91 cents, or 2%. Procter & Gamble's up 0.6%, 52 cents. Apple is up 0.4, 42 cents. The big loser out here is J.P. Morgan. That's down 2.5%. Goldman's off 2.25. Caterpillar's down 2.3, and Cisco is down 2.1. Inside the NDX 100, what do we have? Alexa Pharmaceutical is the leader. It's up almost 3%. The loser out here is SBA Communications. Look at that thing got hit. That's down 5%. CSX is down 3.5%. Western Digital is down 3, and you got JD.com down 2.8. If we do look at the Qs for a second, let's see what we got here. So the Qs right now have 8.8 million. We went higher yesterday with 24 million. We'll see whether they get that volume as it's trying to, go after that B point. There's no doubt that we get the high volatility out here. We go over to the gold contract now. We take a look at gold. What we have with gold is this. Gold hit 1303 this morning. Early this morning, this is. So we hit it...
4 a.m.
Yeah.
3:45.
Yeah. Thus far, I mean, it's got some pressure underneath it.
Underneath it, selling, you mean, or underneath
selling
it?
pressure, yeah,
Okay.
meaning because when we just
That'd
went
be
down,
on top of it.
Yeah, on top of it. Thank you. And we just got down to 1291.20. Now, what I'd like to see on the 10-minute bar is I could test it with lighter volume, because that first bar down, we just did 6,000 contracts, and that thing's got to get tested. It's going to get tested right now too. So, and I'm not to break that. This has been in a consolidation now for 2 days. 1 day, 2 days. Let me bring this back 4 days. Maybe it's 4 days. Yeah, no, 2 days. So we'll see whether that baby's going to hold right there. You're going to get a larger pullback. The dollar, no doubt, got down into the area that we were looking at. Now the real question is going to be, does this get a bounce out of here? Thus far, it's rejected that number. You know what I mean?
Yeah.
91.88, and you're at 92.69. Our phone number is 877-927-6648. Some of the higher volume. Well, actually, let's look at J.P. Morgan. I don't know if they come out with numbers or what's hitting that stock. J.P. Morgan appears. No, they already come out with numbers. Just selling it off. It's not that, the volume's not that high. Now, tomorrow, this is going to be a big one after the close out here. Great Panther comes out with numbers after the close tomorrow. And we'll have to call Bob and get him on.
Yeah.
May 4th already tomorrow. That's pretty crazy.
Talk about some volatility at the top, right? And I know you're still bullish, and you're long.
Oh, but it's volatile.
But that's a perfect example of why you tell people it's too late to get in, because it's,
right.
That's...
It is.
No, for sure, I agree.
Because percentage-wise, look what it did percentage-wise. It just went from $2.25 to $1.66.
Yeah, it's down 20% in 2 days, right?
Exactly.
And it's not that big of a deal, right?
Right.
It is.
Right.
So, yeah.
So you got to wait for pullbacks, folks.
There you go.
That's the bottom line.
There you go.
Yeah, there's no doubt. Because we will get pullbacks.
Well, especially just after it goes up that much, to buy it
Slightly.
is some serious risk.
Yeah, big time. You stay right there, folks. Tommy and I are coming right back. Dow Industrials right now are down 168. You get the Nasdaq off 49. S&Ps are down 19, and gold's down 780. They're hitting gold right now. We're going to be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien. We do appreciate your growling and prowling with us out here. Right now, we have the Dow down 167, Nasdaq's up 51, S&P's are down 20. We have gold down 690. And folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You can have the banner on the top or the side. Hit the banner. You can bring up the exchange. They'll put $25,000 of paper money into your account. You can see all these trades. And I'm going to show you this morning, I'm on the wrong side of this trade, but I can show you also why, if you are trading inside this exchange, that it's a defined risk type of trade.
Okay.
And I bit on gold this morning. And
well, you've had a bunch of good trades recently, so they all can't be winners.
That's right. There's no doubt. Exactly, man. And so picture this, folks. Well, here, let's go through them first. One of them was a flyer. One of them, even when I was putting the first trade on, it has to do with, I guess, it has to do with winning. And then I was putting up $170. Do you know what I mean?
Different risk-reward profiles.
It was.
Yeah.
It was.
I mean,
do you know what I mean?
And you're going to expect different rates of success with them, right? And so when you say flyer, you're expecting you're going to lose more often than not on that trade.
Yes.
You're paying a lot of premium. I mean, I can just take a glance. So go ahead.
Exactly.
Go ahead.
So the first one was, I think it was when I was home. It was early. And what it was is that I was paying like $5. Gold had already gone to 1303. So I was buying out of the money to 1:30 this afternoon.
Okay.
And it was 1,300 to 1,350.
Cool. Yes.
But I paid big premium. Do you know what I mean? So I put up $170, and there's no way I expect.
Yeah, but you're okay. You have 11 contracts in that position.
Right.
Just to put it, so you're only paying actually, like $15 per contract.
Oh yeah, right? No, yes.
Okay.
Sorry, yeah, okay. I'll go back to one contract again. No, I'm with you.
It's all relative.
It is relative.
$170.
Right. So I was paying $15.
I mean, just so you're paying $1.58 in the gold contract in premium within. Now I know the market was below 1,300 even.
It was $12.95.
$12.95.
when I bought them.
Okay,
Right.
so there's 5
right.
points to get into any value, and then you're paying 1.5 above that.
Exactly.
Right.
So, and that gets me to 130. And I was looking, I said, dollar's breaking, maybe it will stay down. I knew it could bounce at the same time. But that was a flyer. Now, the second one wasn't a flyer, and I'm losing on this one, too. The second one, but I didn't go heavy in the second one.
And just to put it, I mean, this when you say like I was risking 170, that's because you had 11 contracts and your max profit, if it pops $50, is like $5,400.
Right.
So that's So,
Right.
but if you just put it back in a contract, that's why I was like, well, you're not paying that much because it's a $500 contract.
Right.
And you're paying $15.
Right.
Just to bring everybody through.
No,
the full.
and I got to stay with one contract because that's
I
easier.
don't know what makes it so hard.
Well, I know.
I don't.
Because I know. Okay.
11 contracts,
Right.
like that's a unique number of contracts for everyone to pick up on the 11 contracts.
Now the second one isn't a flyer. The second one,
Okay.
I am in a losing position, and I didn't really feel that this would actually get under this 1292.
Yeah, and gold has had a big downward move since
Right.
you got in there. So
Right.
and what
Right.
you did, and I like it already in that it's a smaller spread, right? It's only a
Yeah.
15-point spread.
Right.
So it goes from 92.50 to 1307.50.
Yep.
So you basically have 750 on each side of 1300.
Right.
And you were buying it. Let's see. But yeah, your risk reward was probably just like we talk about for what you were expecting. You got a 1296.70.
Yeah.
So 92.50 is the bottom. So that's going to be like 420. So $42 of risk.
Right.
Versus out of the $150 pie. So you had 108 in profit, maybe 42 per contract. Just to walk everyone through.
And now that one there, I have until 11 o'clock.
Okay.
So that was
Better
just
get
trading.
going quick then, right?
No, I know that.
No,
now
that's it.
that's still much better. And if I was in the futures market, which I traded plenty, I'd be out already.
Sure.
Okay, because the gold just basically tanked.
Sure, yeah, and that's why there's no active market on it right now because gold's about $5 below the floor of that,
Exactly.
and there's only how long? 25 minutes left. Now, if that was a daily and it was within $5, maybe there'd be a little bit more of a market.
Right.
It's possible,
Right.
but the time value matters for sure.
Let's go to our man Steve in Nashville. Hey, Steve, what's going on?
Hey, today I'm Panera Pete.
Panera Pete. I love
Just
it.
jump back and forth
Panera
between
Pete,
Panera and Dunkin'.
Hey, you know what we're gonna do, man? I got to call up Panera and Dunkin' Donuts. We got to get them as advertisers,
Sponsors,
and
for
we'll
sure.
get you some.
Some freebies.
We want to do a trade deal, exactly.
Yeah. Well, do you
Okay.
remember? Hey, Steve, you didn't remember this. You know what's amazing is that we did a trade deal with up in the Northeast folks. They get this D'Angelo's sub shop. And remember how many D'Angelo's?
Sure.
We had thousands. I think it was $5,400 in coupons they gave us for free D'Angelo's. And that was a great deal.
Sure.
Yeah.
We gave away a lot of them, too.
We did give away a whole
On your
bunch
show.
of them.
That's
Yeah,
it, yeah.
right.
They're about an eighth of a mile down the street here.
Yeah,
Yeah,
good
they're
stuff.
great. I know. I can go for one right now, man.
Yeah. Hey, I almost jumped on it yesterday just for a quick trade. Dust, DUST, the short of gold up nugget.
Yeah, so let's take a look at it.
Yeah, it's doing good today.
So you get dust. Oh, this is interesting too. That's such a low price because gold's gone so high. Okay, so check this out. So this is the direction 300% inverse correlation of the New York ARCA index. Now this gets interesting too because this is, if we take a look at this, January 20th was at $20. It gets down to $1.27, and you got some juice in this today. So now it's going to go up to the gap. Let me just see something.
Overall, gold's still on an uptrend, though, right? So this would be a short trade.
On a day trade, yeah.
Yeah. Gold is still on an uptrend, right?
I think so.
Yeah,
I mean,
okay.
I think it's not only just in an uptrend. I wouldn't be too surprised if you even see a turnaround today because
I see.
it's just enticing enough that it's down.
Right.
Yeah, well, let's go look. Well, first, see the dust. No, the dust is the equities. So the equities, I can picture the equities pulling back more. So
Right.
let's go into. Let me go into Rango Resources first. So Rango is coming back with 479,000. That's just filling the gap. Yeah, I wouldn't be biting on that just yet. Okay,
Yeah.
so here, we got to pull up a few more. So watch this, folks. Rheingold, in all the equities, but I'll pull them up one by one. That gapped higher last Friday. The bottom of that gap is 95. The top of that gap is $95.33. We've gone to 95.
Bottom of the gap.
The top of. Oh, okay. The bottom of the gap. The bottom of the gap is $95.33. Now that can get filled, but it's getting filled with dramatically lighter volume. So if we go to, let's go to Gold Corp, because both of these are definitely in what you're looking at right now. And Gold Corp just closed it, I think, 1896. Yeah, it just closed it, and it closed it with lighter volume.
Which is what? Good? That's good, yeah.
That's good, saying that, yeah, it can reject it and go up, not go down
Right.
further. Now
Well,
let's look at AEM, because AEM is also in there. And AEM is on the way to closing it.
Yep. If you could, just when you come back, just give 20 seconds to this dust, because it had a reverse split of 10 for 1 a few weeks ago.
And
They
when
announced.
does that come on?
They announced it on the 15th. I don't know. I
Yeah,
just talked
I was going to ask you about that. Stay right there. Tommy and I are coming right back with our man, let's see, Peter from
Panera.
Panera.
Panera Pete, yeah.
Panera
Got it
Pete.
right.
Perfect,
Thank you.
man.
Continue to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is down 175. You get the Nasdaq off 56. S&Ps are down 20. We're talking with Panera Pete. We're talking about dust. So dust, folks, is going for a 10-for-1 reverse split. That is going to be done May 18th, and so is JDST, which is the direction 3 times inverse correlation of the market vector junior gold miners index. So that's, by the way, that's normal in the 200 and 300% correlations, whether they're bull or bear, depending which way the trend has gone. Hey there, Steve? I guess he's not gone. Well, what does happen is that normal as they take your money.
They didn't take everybody's money, probably, right?
No, because on the other side of it, what ends up happening is that the
that's one if you're able to go short at $20.
Well, and watch NUGT. Watch the other side of this.
Right. No, this.
The other side of this is that
exactly.
NUGT went from $17 3 months ago to $115. Now that 122 actually. Now you can see what happens though is that when you're at a large number inside these doubles or triples, you get a pullback. That's compounding that deal.
Yes.
That's down 10%. And we're down. What is that? It's down 20% in 2 days from the high of yesterday.
Yeah.
So I like these things when they're $8 to $12, $13. If you can catch them right there, they're manageable. Let's put them that way.
Sure.
When you go overnight and you make that kind of money, you got to take it, folks. That's what I've seen more than anything. Let's go overseas and take a look at overseas. So last night, Japan was still closed. I don't believe Japan was open last night. 5-2. What day did we? Yeah, that was closed. So it's going to be interesting too because the 2 days that Japan have opened, and I'm not quite sure how many more days that they're closed, but check this out, Tom. So Japan, folks, on the 28th went down.
Just Thursday. Yep.
From 17,500 to 16,652.
Yeah.
Then that's the 28th. Then it was open the 2nd, and it went from 16,357 to 15,975. Now it was closed last night, and I know if you're watching, whether it's Bloomberg or CNBC Asia overnight, what happens, folks, is that they really make a mistake because they bring it across the screen like it's open. I looked and it says, oh, man, it's down another 3.5%.
Yeah.
And then just someone on Bloomberg said, no, they're closed.
It's the most recent.
Yeah, exactly. Yeah. Okay. But it looks to me like when Japan opens back up, man, it wants to go after the volume.
Yeah, I mean, that's more than a 10% move in 2 days.
I know.
Yeah.
That's crazy. And they have a high volume swing low laying right there at the top of that is 15,437. So that's not much compared to where it is.
Definitely not.
Europe right now, is having a problem. The DAX is down 1.6%. FTSE's off 0.7. The CAT's 1.2. All our indices, down over 1% right now. Just the Dow's hitting 1%. S&P's 1%. Nasdaq 1.2. And volume-wise, let's see where we're at right now. Because if we get this expansion of volume today, that's going to bring your probability higher that we're just going to continue lower. So right now, you're 270 million NYSE, which is light volume. On the NASDAQ, NASDAQ got the volume. You're at 557 already. The NASDAQ's leading the way down here, man. Yeah.
It's a big day. Early.
It is. It's really early, man. For a 500 million shares, and it's 1045. Yeah, that's a big number. There's no doubt about that. Oil. Let's go to the oil market. So, what tomorrow? Oil numbers, right? CLM6. So, oil out here. Yep, it's going to be. So, oil's down $1.19. 298,000 contracts traded. 43.69. Look at that. It's just coming back in the lower range. So bottom line, it can go for the high of the last swing point, which is 41.66. We take a look at Exxon. Oh, I think we got some trades here, man. Okay. So Exxon, let's look at this. Remember, we're looking for that November 3rd high, and that's it right there. So 87.43, and it made it to
It's still above it. Yeah.
89.78. And look at that. That actually has a little volume behind it, so it's almost like oil's going to get tested again. That's on the daily. Put this on the weekly for a second. So in the weekly, we did 57 million. Oh, I like this trade. Okay, so watch this, folks. This gets cool, pretty cool. If you get Exxon to close under 87.43, you're at 87, then you'd have a failure on price, maybe on volume too. Because it's 80 million shares, and we did 57 million last week. That'd be pretty cool. Let's go to Tim in Ohio. Hey, Tim, what's going on?
Hey, how you doing, Tom?
We're doing...
I'm a new listener. Just started listening a little while ago. A buddy of mine in Virginia, Bill, told me about it, and just really don't know where you were all my life. Is really what it amounts to.
Oh, you had too much. Well, listen, welcome to the Tiger family, and I want to thank your friend Bill. Thanks so much, man. Appreciate it.
Really. Anyhow, the thing that really kind of caught my attention, I think it was the first show I caught of yours. You were talking about Barrett Gold, and that's one of the few mines that I had been tracking, and you talked about somewhat of a setup on that, and I jumped into that around 1540, something like that.
Okay.
But unfortunately, I don't know where to go with it from here, so I thought maybe you might have some insight on it.
So with Barrick, okay, so we take a look at Barrick. Barrick's going to come out with numbers. Oh, this is good. They don't come out with numbers. They must have just come out till August 8th. So the low for the year is 591. The high's 1950. You have... Let me put this on a weekly for a second, see where we're at. Okay, so... I'll put it on a monthly, actually. So on a monthly, what we've just done is this. It goes top side, your swing point's $21, your downdraft $17.50, going all the way back to April of 2013, and that's good. So it's coming into that with volume. So this looks like it's going to make a run to the $21.68, Tim.
Okay.
So what I would do is this. Okay, so now the question is, you know, you're in at 1568. Is that what it said?
Yeah, roughly around there.
Okay. So, what's cool here is that you actually have a smaller ABC up too. What's this one? That's $13. That'd be the A point. April 1st. The B is 1660. The 12th. What did I say? 13, 1304, 16. So 3. Oh, that gets you... Hey, just stay right there, all right?
Sure enough.
We'll figure out a nice stop for you. This is Tommy O'Brien. Tom O'Brien, we do appreciate you growling and prowling with us out here, folks. Dow right now is down 171. Nasdaq's up 54. S&Ps are down 20. We're going to bring it right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We're talking with Tim from Ohio, and the first one we're talking about is ABX Barrick. So you're at 1841 right now. What I would do is this, what you're going to hear off me is this, okay? When this broke topside, Tim, right, it started at 1601. So a normal retracement can get you back to 1601. So on that one, I would put the stop underneath it because I think this thing's going to go a lot higher. Do you know what I'm saying?
Right.
And you're in it at the right spot. So, yes, I'm saying, yeah, you can give up $2.30. But the other side of that is that, if you can get by this retracement, this thing can be at $29, which is the top of April of 2013.
Understand.
Now, do you own Great Panther too?
Yeah.
And where do you own Great Panther?
Just about where it's at right now.
Okay, so with Great Panther, you're at 164. Now, they're coming out with their numbers tomorrow, okay?
Right.
Now, this is operating correctly at this point, meaning that yesterday we had volume of 8 million. Well, it's going to be close. We're at 3.3 million right now. But I don't want to see another 8 million shares today, I can tell you that. If it's a rejection, that's all right. With Great Panther, I'd put a stop under... You got to get by the... I'd put a stop under 146.
Okay.
That's how I'd play that. Now Great Panther, just so you know also, Great Panther looks to me like it wants to go to 262, first stop, and you have a $3.52 to $5 deal happening. And where that is, the 350 is the low of March of 2011. That's a high volume spike, and the high is $5. So, you can kind of see what kind of heat you could take.
Right.
That's the reality here.
Oh, yeah.
I'm going for a bigger play on this. Do you know what I'm saying? But, you have to, money management is crucial, and listen, I think you're in two good stocks, man. And the thing interesting about the Barrick one, folks, is that Barrick and Newmont, they were dogs on the first gold run, but they're very powerful now because they haven't sold their gold forward. In the first gold run, they sold their gold forward, and it cost them a fortune, And thus far, it's not in records. Everything, if they sell forward, that is a material effect, and they have to basically tell the market within 90 days that they have done that, and they haven't done it yet thus far, which is great. Do you know what I'm saying?
Yes.
Really?
Yeah.
You got time for one more?
Sure.
CLF, Cliff Resources. That's a local company around here.
Yeah, that had a little. That's a good setup, man. Okay, so this broke topside, and you'll see what I ended up doing. It broke topside, went to 583, had 47 million shares. It's backing down with 5 million shares. Okay, so right there.
I'm kind of hoping to actually double up on this. I'm in at around 256, something like that.
Yeah, this is something maybe I'll get into. What does this company do? I should know this.
They're iron ore.
Oh, iron ore. Okay, that's a good business. Iron ore. All the Chinese are going crazy trading iron ore now.
That's almost $1
They
billion.
have mines in Australia as well.
Yeah. No,
They just opened up a mine, reopened a mine up in Wisconsin. Apparently, that's
right.
kind of got my interest back in.
It's a $1 billion company market wide, cap. That's nice to see too.
No, that is. This is almost a buy right here. It finishes the gap at 434. You can buy it. You know?
Okay.
Yeah. Cooking brother. Hey, welcome to the Tiger family, man. Tell your friend thanks so much.
Hey, sure will. I'll tell Billy that you said hello.
Absolutely, man.
Hey, thanks a lot. You guys are doing good.
Thanks a lot. Have a great one. Fast hour.
That was good, man.
Okay, pal.
What are you talking about, man?
Sorry,
Let's slow down.
Okay, folks, stay right there. Man, Mr. Basil Chapman's coming up next. TD Ameritrade, Think or Swim, Steve Rhodes, Dave White,
Andy
myself,
Heck.
Andy
That's
Heck.
right. Awesome, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.